Welcome back, guys, from the exam. So today we're going to be taking a look at two different chapters today, okay? One is going to be dealing with bank transfers and bank reconciliations, okay? So fun stuff. And then chapter 6 is about reports. Now, again, each chapter has significance to it, but a bank reconciliation is going to be probably one of the more important transactions that does exist, that you will be required to do, just because it's an easy and it helps you be able to organize all your transactions in regards to using your checking, bank, or debit card, right? But of course, bank reconciliations isn't just limited to just bank statements. You can use it for credit cards. You could use it for almost anything in this, anything that has a register. You can do. All right. So again, here we're on chapter 5. Here's this box window right here where it says, if you want to follow along with me, you should be in Bank Rec 21. All right. The password, once again, is always going to be capital QUESTVIA 21. Questiva. Okay. Now, before I go ahead and jump into this section where it says common bank transactions, I'm just going to go ahead and skip forward just because this book kind of jumps around back and forth, having you open up a invoice and then having someone pay and then yada, yada, yada. So what I'm actually going to do here is I'm going to skip forward to this small section where it dives right into bank feeds. Just because this section right here is really, really small. And the purpose of having bank feeds is, well, what is bank feeds? So this is actually quite new to QuickBooks. QuickBooks 2020 is when they started introducing what's called a bank feed center. All right, so this is where I've mentioned before that if for any reason you want to attach or have Intuit connect your online bank account to QuickBooks, yes, you can do it. And that way, for any reason that you get notifications, it will come from your bank, and it will go straight to Intuit. So you will always know what your activity is in the bank account online at all times. And what you can use online banking for as well too is actually to make payments on using Intuit through online. So again, that's the cool feature here. But then once again, that's extra more sensible data that you're adding to QuickBooks. But that's the convenience of being able to use QuickBooks as something that helps you with your business, right? This is probably, again, one of the most important things that you can attach your online bank account to QuickBooks. And we call that the Bank Feed Center, okay? So once again, I'm not going to go over any examples here just because, again, in this particular scenario or this particular sample file, unfortunately, there's not a real bank account linked to this scenario because, again, that's sensible data. It is super private information. So unfortunately, they have not linked the actual bank account that exists here, right? That's not real. It's a fake bank account. So in order to go ahead and find that, you can either go to bank feeds on your icon bar, or you can locate bank feeds on banking on your menu bar. Okay, so banking, and you should have bank feeds on here. Okay, bank feeds right here. Okay, so again, you'll have it on the icon bar set by default, or you'll have it here on the banking menu right here. Yes, on the menu bar. Okay, so when you actually do select it on the icon bar, because the reasons of us not not having the actual bank set up for this scenario, it does make it a little more difficult to be able to teach this. So here, bank feeds. So if I were to go ahead and click it, it's going to give me this little setup window on how to operate it or how to be able to do this. So again, it says advanced bank feeds, so you can either learn more, setup, or skip. I usually click skip and they'll give me an error message saying all this, that you need to have this and need to have that. So again, when you actually do set up your bank account, it'll more or less look something like this, and it will tell you that you need to enter in all your information for the bank here. And that's fine. And like I said, since the one that we're looking at is called National Bank, you can type it up, but I'm telling you now, this is a fake bank account, so it's not going to show up. See, I type in National, it doesn't even exist. Okay. But then again, this is the Bank Feed Center. If you do perhaps have the right bank account and you do enter all the information, then as I've mentioned before, it should take you to the place where you're able to take a look at all of your information, such as credit card information and et cetera, et cetera. Now let me go to bank feeds real quick and show you that window real quick. Bank feed, employees, banking, bank feeds. Okay. And then you have what's called a bank feeds center. Okay. And then you have bank feeds mode. I'm sorry, I can't remember how to get to the actual bank feed center. But at the end of the day, like what happens is that if you take a look in your book, what's going to happen is that when you do arrive to your bank feed center, you do have these 4 options where you get to take a look at your credit cards. And again, it says do not do these are just steps for, again, for general knowledge, just because one, we don't actually have a bank account. So again, it basically has you set it up, and it has you go ahead and locate usually for this, when you have that type of this type of bank feeds, it lists out all of the accounts that exist under bank feeds. Okay, so in this case, if you are not using bank feeds, again, you should be able to do it by going to change the bank feed setting on the expenses mode. You can have the expenses mode. Again, each one is going to be subjective, but again, it's only if you are actually going to be using online banking for this particular example. So again, you can change the modes on the way the layout looks like. But as far as that, like I said, in this example, I can't show you what the bank feeds look like just because I don't have a bank account set up. All right, so if we go into another file, I think that's what I did, and you'd be able to see what the options are available, because it should be able to do that. I just don't have it set up, so that's why it's not showing me anything, and I can't set up something that I don't have information on. Okay, so again, I don't have the bank information here, but maybe for another example, it will show me exactly how to do it. Okay, so it says it's like these popular banks. So again, it is legitimately asking you to set up your bank feeds. So again, that is that small section right there. So again, if you do have, and you don't have to just attach your bank itself. You can actually attach credit cards as well, and it's really cool how you're able to check out how the bank feeds actually work, because you can attach credit cards information on there and etc. etc. So it's really, really cool on the setup on how to be able to do it. And you can even pay You could use the bank feeds as an online resource to be able to, again, make payments on credit cards, or actually just use it to pay for something. Yes, you can. So that's that section right there. Okay. But so then again, it jumps around. So that's why I wanted to do that section first. So again, back to section 1 is going to be common bank transfers. Okay. Now again, a common bank transfer is usually when you transfer between bank accounts. So that one's actually fairly easy and pretty straightforward, right? So I'm going to go to my QuickBooks real quick, and I'm going to check out my chart of accounts. Okay, so if I go ahead and check out my chart of accounts, I'm able to go and see that I have a checking account and I also have a savings account. Now, a common transfer ability is, again, when you do have some kind of savings that you want to have for the company, it's pretty straightforward when it is to make transfers, right? Because oftentimes, like, you need to have so most companies would have what's called a restricted funds kind of account, and what that does is it literally is only for emergencies only, and you basically transfer money into there. It's similar to like having a petty cash, but this is for emergency expenses only. Like, emergency being if something happens to the company where let's say you go into a lawsuit, you have that extra money for that reason, where petty cash is for minor expenses, right? Emergencies, like, okay, well, if we took a huge loss today because of some kind of reason, then that's where the restricted funds would come into play. Well, how do you make transfers doing that? Well, if I go ahead and click banking, I have the option to transfer funds. Now, if I click that window, it's going to say, well, okay, well, here is a transfer form that we can fill out. Now, again, you can do this for like a petty cash account, right? You don't have to necessarily go through the deposits window. You can transfer money almost anywhere from any account. Now, usually this is for between bank accounts. So again, it says that you can transfer money to specific accounts. So let's say if you wire or have an EFT, you can use it through this section right here. But normally you would record an EFT through the checking window where you can go ahead.
Yep. No, I'm sorry, it was a mistake. Sorry.
Oh, okay. So again, yes. So again, usually you would do the transfers between bank accounts. That's what I've seen most commonly. Again, you can use the EFT, which is the electronic funds transfers, through the checking account itself, like on the checking register. You just make sure that instead of writing a check number, you write EFT. But you can also use it through this little device right here as well. Okay? So in this example here, it shows me that I need to transfer some money into my checking account. So again, in this case, I want to transfer on January 28th. January 28th. Doesn't have to be a specific class, because what I'm going to do is I'm going to transfer from checking to my savings account. All right, and I'm going to transfer the amount of $100. Right, pretty straightforward. You can put a note here on what this funds transfer is. But again, it's just a savings account, so I'm going to go ahead and click Save and Close. And when you do that, basically what it does is it takes money from your checking account and it transfers it into savings, okay? Pretty straightforward. See? Let's take a look where this transaction is. There's a deposit here. Oh, I'm in the wrong date. It is, what did I say? It was January 28, right? right here, transfer from checking to savings right here for $100. Oops, well actually that's no. The next one, bar, down here. Okay? So it shows you here on your check register that you're just transferring money from one account to another. So again, that's the most proper way to use the electronic funds transfers by using that particular section there. But once again, it is more proper to use a checking account because then you can associate it to the person you actually transferred the money to, where this one is literally going from one bank account to another. Okay? Any questions there?
No.
Okay. So now that's that. So there's only one place to do it, and that's on the banking menu where it says transfer funds. There's no button on the home page to be able to do that. Okay. Because if there was, I would have already told you. But if you check your home page, there's no way that you can transfer money electronically, right? There's only one way to do it, and that's through the banking menu, and you click the transfer funds tab on there. Okay. Now again, please do not confuse the bank feed center with your actual bank account itself, because they are two separate things, right? We actually have our check register, our checking account. It's only for the purposes of online banking only. That's the thing that you have to know, that the bank feed center is literally, you are doing your online banking, but instead of logging in every single time, you're logged in through Intuit, right? And whatever notifications you get from the bank, sends it to Intuit, and it notifies you every time you use bank feeds. Okay. So other things that we can take a look at here is going to be, well, what happens when you either receive a bounce check? Well, let's take a look here. Bob Mason, right, our lovely Bob Mason, wrote us a check, and in this case here, he wrote the check and he didn't have enough money in his bank account, so the check bounced. Now in this case, right, in this situation, right, when you do receive a bounce check, your bank account actually charges you money for that, because they basically said that, well, we wasted our efforts to try to transfer this money into the accounts, and it's and it says that here, well, the person didn't have enough money in their bank account, so because they spent the time processing it, they charge you because you decided to submit a faulty check. Okay, you're trying to almost, kind of fraudulate the bank by saying, hey, I have a check for $2,000 and I try to submit it in there and it bounced back because that person that you wrote, or who wrote the check out to you, wrote out a faulty check. That's the same thing here, right? You're trying to fraud the company, right? But so they will charge you based on what bank account you are in. But not only do they charge you, they also charge the person who wrote that check out. So in this case, when we end up having to pay for, for someone else's mistake, right? Therefore, we have to turn around and we got to charge our customer because they charge our bank account for it. So, in context, that's not fair because, hello, all we did was our duty system. We collected the money and we put it into the bank. However, in their perspective is that they're supposed to pay for something. So if we got charged based on what a customer did, that's technically not the company's fault. It's the customer's fault. So what we're going to do is we're going to turn around and we're going to charge the customer an additional fee on top of that. Okay? So let's go ahead and dive right into our example here on how to record a bounce check. Now, there's only a couple ways that you can do it, but the one that they want you to do is if you go to receive payments window. And usually what happens is that they said, oh, go back to the previous one. So in this case, the previous one was Bob Mason. But if for any reason you can't go back and find that exact person, all you have to do is just go into the customer center, locate that exact person, and locate their exact check, and it will work that way too. We'll pull up this information just exactly like this. So here, Mr. Bob Mason paid $1,177.86, right? Because he attempted to write us a check for 2 payments, for 2 invoices, right? He decided to just pay it all off. And in this case, at this very top of this window, you're going to see what's called a record bounced check, all right? This only will be there only upon if a customer paid, right? So that's why it's very important that you understand that this window is here. Now, if I go to my customers on the window here, and I see payment reminders are receive payments, but it doesn't tell me that I can, I can record a bounce check. So in this case, the only location to be able to find to record a bounce check is through the customer payments window. Okay? So any way that you can record a customer payment, right? So there's 6 different ways, right, to record a customer payment, or actually 7, because if you include the invoice, and whichever way you could get to this window, whether it's homepage, menu bar, icon bar, or the customer center, get to the customer payments, then you have the exact way. You only have to do is just an additional step where you're going to click on record bounce check. So in this case, Bob Mason, he wrote us a bad check. So I'm going to go ahead and click on record bounce check. Then you're going to go get ahead and get this window right here where it says, well, okay, you end up getting charged for this. So bank fees, right? In this case, the book tells me I got charged $10. All right. Okay, I got charged $10. What day? And in this case, tells me here that I got charged top of the customer. I got charged on February 8th, 2021. February 8th, 2021. All right. And I got this, and this was a bank service charge. Now, again, class is optional. But in this case, yes, you should be able to associate it because Mr. Bob Mason is from San Jose. So again, it's optional, right? And now it says the last question is, how much are you going to charge your customers? Well, I mean, in this context, right, $10 from a bank is pretty low. I know, for example, if you go to Bank of America, they charge you straight up $35 for anything that happens to your account. Whether you overdrafted, bounced the check, or even, it could be even worse because if you are a commercial or a business user for Bank of America, they're probably charging you at a higher rate than it is for a regular consumer. But anyways, $10 is, in this example, shows us that you got charged $10. So therefore, yes, you can charge your customer however much you want. But again, you don't want to charge them to the point where you scare them away, right? You want to do something that's reasonable, that's able to, 1, cover your costs that you got affected for, and 2, also maybe come up with some kind of profit because it was their mistake, right? So in this case, I'm just going to go ahead and just say double it up, saying, okay, well, give me $20. I'm going to charge this customer $20, $10 to cover my bank fees, and then $10 to cover up whatever I needed to do, right? To be able to take that extra $10 to go towards something. So in this case, I'm going to be using it as, again, income. But again, of course, it wasn't our fault. So I guess this is our way of charging something for the inconvenience. Okay. So then I'm going to go ahead and click next. So when I go ahead and click next, it tells me, are you sure? It's going to be based off of the 11 $11.97. Okay. And again, it's going to charge you an additional $20 fee. And when I click finish, notice this. Now that means what happens here is when you record a bounced check, it tells you right here that this is a bounced check. Okay. So there it is. And then now it's attached a $20 payment here because Mr. Bob Mason, right, originally owed us money, but because he sent us a faulty check, he's getting charged an additional $20 for the reasons of sending a faulty check, right? Because we had to go through problems, we got charged, and so on and so forth, right? So what you can do next here is, let's say Bob Mason, and then what you're going to do is what happened is it actually undoes the invoice. So basically what a bounce check does is it's similar to voiding a check. It undoes it, right? It undoes it. That sounds weird. But what it does is basically basically, so in this case, right, when we're looking in terms of accounting, it increased or it decreased or increased your checking account, right, because you received money, and it decreased your accounts receivable. In this case, but when you undo something, right, and we record a bounce check, it's basically telling me that my invoices are still outstanding and that this person still owes me money. So if I go ahead and take a look at Bob Mason's account real quick, it's going to tell me that Bob Mason actually owes me 19 where I post right here, Bob Mason. So he owes me now $11.97 because his account he wrote a faulty check, so therefore he owes me money. Okay, and there it is. And what I could do is maybe then what happens is you're gonna reissue a notification to your customers, of course, letting them know that their check has bounced. All right. And other two key things is you're going to let them know that because due to the circumstances, you agreed to these policies that if you do send a faulty check, this is what happens. You get charged additional $20 or XYZ, right? X amount of percentage of your sales. So again, yes, those things you have to have agreement terms for. Okay. So again, when we take a look at this, I could go ahead and let's receive payments. Okay. If I go ahead and receive payments from Mr. Bob Mason, now notice this, he has 3 things to pay for now, right? The actual invoices, and then again, he is charged that $20. So in this case, right, we're gonna say that in this window here that Mr. Bob Mason is going to pay again, and this time he's going to pay for the full amount for the $11.97 on February 10. Okay, that's weird. Oh yeah, that's right. It was on February 8th when we recorded the thing. So again, the date is February 10. Okay, and of course he wrote a check, okay, and this time he reissued a new check. He issued a new check number 2538, all right, and it's for the total amount of the $11.97.11. Again, you could either type it in here, $11.97.86, and again, it should pull up all these things are paid for, right? No underpayment. And then you're going to go ahead and record that check, right? So there you go. If you take a look at this one, again, you have payment, but it's canceled or it's bounced, so you recorded that check, and then again, we received another payment right here, okay? All right, so I'm going to go ahead and save and close this example here. So with that being said, any questions in regards to recording a bounced check? Okay. Then, of course, there's also a little section down below, right? After you've recorded your bounce check. Well, what happens if you wrote the bad check? Well, there are many things that you can do in case you do end up recording the bad check. Here's the 6 different things that you can do. Now, again, especially when you're a company and you're writing checks left and right, right? You can potentially have one of those days where you accidentally overwrote a check, or you wrote way too many checks that you could possibly send an NSF check, which is considered a non-sufficient funds check, okay? And that is common. Yes, it is common for many, especially many companies who decide to wait for this specific day, usually Fridays, right? Cut the check, pay all the bills, yada, 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 okay? So yes, it is a common thing that you can accidentally do. And if you do that, here are 6 steps that you can to take those procedures to go ahead and either contact the vendor and tell them, hey, I'm sorry. You will have to contact your bank as well, or the bank will notify you, and so on and so forth. And usually, again, vendors can do the same thing. They can charge you a fee for that because you sent them a faulty check and it charged their account. So again, you can also say, well, hey, hold on to that check. Let me put money into the bank, and then you can redeposit it. Most common one that you would normally do is you would void the check, call your bank, and make sure that it's there. So then that means they can't redeposit the money. Void the check and just reissue them a new one. That's the most safest and better way to do it, because again, when you reissue a new one, you are going to reissue it for the correct amount, not send a separate check for the actual fees that you were charged. So in this case, you're better off to get all the information from your vendor and to see what can you do when you actually accidentally write them a non-sufficient funds. Okay? And then we talked about bank feeds. All right, real briefly about bank feeds. So let's go ahead and take a look at the next section here, because once again, there's no example for the bank feeds just yet, but I'll show you one later on. Okay. Okay, so I'm trying to locate the next section here. So the next section here is we're going to talk about actual bank reconciliation. Okay, so again, this is a common thing that you should do, especially when you are writing checks left and right, or you are, actively using your checking account, whether it's through electronics funds transfers or et cetera, online payments or online banking. Now, again, here, this section is right here, tells us, well, reconciling your accounts is a common thing that you should do as a business owner, especially when if you think that you're doing accounting correctly. The best way is to also ensure that whoever's on the receiving end of your checks, or every time you deposit money into the bank, that it actually clears. So that's just another way to double check that your transactions had actually occurred and had actually happened. So a common thing that you'll normally see would be a bank statement, right? At the end of the year or at the end of the month, usually you get monthly statements or even quarterly statements from your bank, and that could be also requested as well. And basically it tallies up and shows you what checks have actually cleared and what checks have not cleared, what deposits went through, and et cetera, et cetera. Basically gives you your account activity. However, the best thing to do is, because when we're comparing to our books, we have to understand that when we write checks out, right, it doesn't clear right away, because it's under the circumstances of did the customer or did the vendor actually receive the check? And if they received the check, did they actually deposit the check into their bank account? And in most cases, that's usually the number one thing, right? You're not obligated to, once you receive a check, you're not obligated to take it to the bank right away, right? You can either wait till the end of the week, depending on what kind of business you are, or if it's necessary, you can even do it at the end of the day. Now, in most cases, again, if you are a small business, right, that should be a good business practice to, once you receive money, you take it to the bank right away. That way you can deposit all the money that you need. But once again, there's many other circumstances where you could record a bounce check. All right. So that's the whole purpose of this right here, is that we're going to be focusing on a bank reconciliation. Now, if you actually take a look here, what can you actually reconcile? And it's going to be any account that basically has a register. So if you actually take a look here, it says right here that you can reconcile almost any current asset, fixed asset, credit card, current other current liabilities, long-term liabilities, or equity accounts. So basically any account that has a register, right? Now again, the only problem issue here is that how are you going to reconcile your equity? You don't normally get a bank statement for that, no. But this is just saying in case for any reason, let's say, for a current asset, right? You're most likely going to be receiving some kind of proof, like for example, you want to adjust your inventory. Well, you should know that, right? Because you have proof of the purchase of inventory, right? You could definitely keep track of that, and you also have proof of sales. So you could do it that way too. But again, the more common ones are going to be things like a bank reconciliation, so a bank, because you normally would get a bank statement. A credit card, you always get a credit card statement. Any loan statements, right? You could always reconcile a loan via maybe you disputed with them. Okay, maybe you're deferred again. It doesn't matter what it is, but the more common ones that you would normally reconcile would be a bank account or a credit card account. So let's take a look at our first example here, where we're actually taking a look at a bank reconciliation. So here we have this window right here where it basically shows us what has happened in our bank account as of January 31st, 2021. So again, here's a look of a regular bank statement that you would normally get from your bank. All right, that's always number one. Is you always typically you want to do this at the end of the month, because what happens is that then you reset your checking account to reflect that you have this amount in your checking account. Okay. Now again, because you are writing all these checks out and depositing all this stuff in here, right? It is common that you're trying to reconcile your checking account by entering in things that you didn't know that the bank has charged you, but of course, whatever that you put on your end, eventually the bank will recognize it. So usually before you even start your reconciliation, the first thing you should do is make sure that all deposits go through, all checks that you've written is done for the day, no more after that. So this right here, I'm going to submit Mr. Bob Mason's deposit here. Okay. So now I have money in the bank account. So then now, again, all my checks are done being written out here. So now I'm going to take a look at my checking account. And right now it tells me I have $2,752.30. So straightforward, right? It's a list of all the things that we did. So transfers, wrote checks, deposits, and bill payments, right? We've done all of that. Okay, so I'm going to go ahead and close this window, and then once we've already made sure that every transaction is completely done as of the 31st of January, right? This is where we have this little reconcile window right here, okay? And you're able to also access the reconcile window by going up to the banking menu, and then you can also click on reconcile right here. Okay, only two ways, right, to do a reconciliation. So when I click on reconcile, you're going to get this little window right here. All right, and this window is basically going to help you do a bank reconciliation to compare your bank account with your actual checking account that you've done manually, right? Keeping track of your own transactions. So in this case, right, we are looking into the date. Usually is always going to be at the end of the month or whatever it is. But let's take a look. If I click on here again, it's any account that has a register. But again, we most focus on bank and credit card information. So again, my checking account's going to be the number one thing. Now again, the second thing that you need to make sure here is that your beginning balance is going to match the beginning balance in your checking account on your bank statement. So in this case, I should have started out with $14,384.50 on my bank statement. So let's double verify that real quick. So here, my beginning in my bank account as of December 31st was $14,384.50. Okay, that's number one rule here, is that you begin your bank account and your checking account must be the same before you do the reconciliation. If it isn't, because for any reason that you had a discrepancy, then that's where you're going to have to go back and locate that discrepancy, which we'll talk about in a second. But that's usually rule number 2 right there, is to make sure that your beginning balances do match. But however, your ending balance does not need to match, because that's the purpose of recording this reconciliation. We want it to match at the end of the month. So in this case, right, it says here that at the end of the day, your total amount that you should have is going to be $5,424.92. So 5424.92 is what I'm going to go ahead and record. So then I go back to my QuickBooks right here, and that's what I'm going to record, that my amount should match my bank right now, right? Should be $5424.92. Okay? But I know for a fact that isn't true. Go ahead.
I have a quick, in your statement date is 2019. So how is it matching when it's 2020?
Oh, right. Thanks for that one. So I have to fast forward to 2021. Okay. Okay, so January 31st, 2021. Okay. Reasons why it's 2019 is because when I taught this book, literally like in the very beginning of the year, so in January, February, all the way to April is when's the last time I taught this class. We were using the 2019 version or 2018 version, which was using dates in the 2019. So again, these files are the exact same files as it was for the previous book, but of course they didn't transfer all the information in correctly, right? The dates still appear the same, right? So we have to manually fix that. So thank you for that. So again, we need to make sure that our account balance at the end of the day in my checkbook, right through QuickBooks, matches the bank statement. So that's why I have to type in what the bank statement says that your amount should be. All right. And of course, you're going to be entering in all of your service fees and any interest that you've collected. So in this case, let's take a look at my bank, because that's usually something that I don't know that the bank has charged me, right? Because when a bank charges you this money, right, for services, what they do is they automatically take it out of your checking account without notifying you, obviously, right? They don't care. They take it away out of your bank account no matter without even letting you know. So in this case, let's take a look at what happened here. So my interest I see is at the top here. I have other payments, and here you go, service charges. So in this case, on the 31st of January, I got charged $10 for service charges, right? And that was, once again, for my bounced check. So I'm going to go ahead and put my note here that I got charged $10 as of the 31st of, once again, 21. So make sure you hit that calendar. Okay, and what account are you going to associate this one? This is a bank service charges. Okay, and then of course, because the class, right, since it's not related to the Walnut Creek or San Jose location, what you're going to do this is going to be overhead, which applies to both the company, both locations, right? Okay. And then it's going to ask you, what's the amount of interest that you've collected? Well, let's take a look at my bank account, right? Because I allow electronic funds transfers, so therefore I can charge interest and collect it as income to my customers. Or maybe I did the people who owe me on accounts receivable, right, on an account, because they financed with me, right? I could charge interest based on a monthly statement, just exactly like how a credit card would. So in this case, right, interest that I've collected so far is going to be $8.62. So again, $8.62. And this was as of the 21st. All right, and the account here is going to be interest income, right? Because we're not charging interest, we're collecting interest. Okay? And again, once again, this class is going to be overhead. Now, again, what you could have done too is you could have entered this in manually through the check register, right? Usually you can do that, but when we do this exactly like this, it does it for us automatically. So we don't have to actually manually do it, but you do have the option to do that if you would like. All right. So what I'm going to do here is I'm going to click continue. So this is how they make it that much more easier for you to be able to reconcile your bank, is that you're literally going to compare all this is the list of all the checks that you wrote, all the deposits you made, and et cetera, et cetera. So what you're going to do here is you're going to compare and contrast your bank statement and check mark off the things that actually cleared. Okay? So, but in this case, we also want to filter things out as well. So in this case, if I go up to the very top of the window, right, I could click on hide transactions that happened after the statement date. So in this case, right, I have a bunch of transactions that happened on February, right, at February 7, February 8, and February 8. So what I could do is I could click on this transaction or click on that, and it hides everything that happened in February, because we can't use February materials to reconcile something that happened in January, right? Our end of the date is going to be as of January 31st. So in this case, by clicking this, it hid all of my transactions that happened in February. Right? So now we're going to go ahead and compare and contrast our bank statement. And what the most important thing about this bank reconciliation is, you want to make sure that you keep in mind and focus on this very bottom corner right here, because this is going to give you your detailed information on things. So here, right, service charges was minus $10, plus interest is $8.62. Right here tells me my ending balance in my bank account should be $54.24.92, but my current balance right now, or things I need to clear out, is $14,300. $383.12, which should leave me right now, my ending balance is negative $8,958.20. And in this case, that's wrong already. Our goal, our end goal at the end of the day is to match my bank statement with my checking account. So my goal here is to get 0 at the end of the month. And if I get 0, then yes, I've completed my bank reconciliation successfully. All right. So let's go ahead and take a look at that, our bank statement, and see which things have happened. So first thing that we have here is our deposits, right? It looks like here that we've made a total of 3 deposits, right? One on January 30th, second on January 30th, and third on January 31st, right? All customer deposits. Okay? So we have 3 things, one for $249, one for $19.50, and one for $11.77. Okay? So let's take a look at our bank reconciliation window and check mark things that have cleared. So in this case, I have exactly 3 deposits right here on my deposit side, and I'm going to check mark one at a time. So I did receive my $249, I did receive my $19.50, and I did receive $11.77. Now notice this, when I click on all of that, now my discrepancy window says that it has dropped down from 14,000 to now 12,000. So therefore, or 17,000. So now I need to subtract money out from my checking account. So this is where it is. So this is what I've talked about. Every time you select something that has cleared, it's going to start automatically calculating, so you know how much discrepancy or how much money you still have left to clear. Okay, so that was the very first one, which is our deposits. Next section here is going to be our checks that we wrote. So we wrote a check on these dates here. So the check, they give you the check number. So check number 325 cleared, 326, 327, 6001, 6003, and 6004. So we're missing 6002. And we're also, and everything else, it looks fine, right? 25, 26, and 27. So let's take a look at our bank reconciliation window, and let's check mark it. Okay. So again, check number 325 has cleared, 326 has cleared, and 327 has cleared. All right. We also have check number 6001, 6003, and 6004. So here in my books, I recognize that I am missing my 6002. Maybe that was a voided check that you wrote and took back, right? Because if you remember in our example, that's what we did. We voided a check and then we reissued a new one, right? So there you go. All those numbers are there. We still have check number 328 pending and 6006 pending. So let's take a look now. Now I'm down to this, and it says that I still am missing $8,000. Well, let's take a look at my bank statement and see if there's anything on my bank statement for that $8,000. All right, can anybody locate it?
Is that it in other withdrawals?
Other withdrawals, where it says right here where we had a transfer. So that means we transferred money for $8,000. All right. So let's take a look at our bank reconciliation. Do we have an $8,000 transfer? Let's take a look. Yes, I do, right here. Okay. For this right here, there's no details into it, but I said it transferred $8,000. And when I selected that, that has been verified and that's cleared. Now we are at my bank reconciliation and we finally are at 0. Okay, so that means success. We completed our bank reconciliation with no issues because the number that we started out with was the same. Okay, and we ended with the same amount, right? And these extra checks that have not cleared, are going to clear in the next month or the next statement. Okay. So that's how you do a bank reconciliation. Okay. Now, for any reason, let's say that this you couldn't find this $8,000 on your statement or on your reconciliation window. What you could do too is that if you can't find it, what you're going to do is you're going to go ahead and click on this modify, and you're going to go back to that bank reconciliation window. And once again, that's why it's so important that you know that your bank reconciliation window, right, your ending balance must, or in this case, your beginning balance must be the same when you start. If it's not the same, what you're going to have to do is you're going to actually have to go here and click the locate discrepancies window. You can always undo it, okay? You don't, in this case, right, in Pro, you can only do one bank reconciliation per month, okay? Or you can only view up to the latest one. Where Premier, Enterprise, and Accountant, you can do as many bank reconciliations and be able to locate every single one for the month. So in this case, again, Pro, you can only do 1 month at a time, where Premier, Accountant, and Enterprise, you can do multiples, and you can undo them, you can revise them, etc., right? But in this case, if this number does not start out the same in your bank statement, you do need to click on locate discrepancies. And then you can either run these reports or to search for that discrepancy. Okay, so once again, your book says do not do this step, which is fine, right? It basically shows you what happens when you do have that discrepancy, right? What do you do? And you would run these reports. And what these reports actually do is they actually find any voided transactions. So basically, this is your voided transactions list. It will take a look at all the voided checks that you've written, etc., etc. Any bounced checks that have been written, and etc. But in this case, I didn't have a discrepancy, so I'm going to go ahead and click cancel. And what you're going to notice here that I'm going to recheck mark that bank that $8,000, so I get 00. And I'm going to go ahead and click save and close or continue or process this. So there you go. Then you're going to get this window here where you're going to have the option to select a bank reconciliation summary or detail. Okay, so again, I'm going to click both, and then I'm going to go ahead and click display. So once again, it gives you in detail, okay, what has happened here, right? What did you do? What are the things that happened here? What were uncleared and what were cleared? And then again, you're going to have this, which gives you the details of which checks actually cleared and which deposits actually went through, and etc., and give you more in details of the actual bank reconciliation itself to show you that this is what you did for the bank, this is what you did for the checking account. Okay. And of course, you could produce these on your own as well, but usually that happens after a bank reconciliation has been completed. So if I take a look at my checking account, right, it's not going to reflect that I have that correct amount, but because I have pending transactions, but it is going to show me that I did have a bank fees in here for the $10, and the also right here that I wrote out a few things, right? So I entered in my service charges and my my interest that I collected. Okay. All right. So any questions in regards to a bank reconciliation?
Yes. What are those check marks on you?
Oh, sorry. Okay. So this window or the previous window?
Yeah, no, that one. Can you tell me again what are the check marks next to the amounts?
So this is just to verify that you process through them with the bank.
Okay, thank you.
Saying, yes, this happened, this happened, this happened, but not this, right? This check that I wrote for 6006 has not been cleared. So that's why that check mark isn't there.
Okay, thank you.
All right. Any questions in regards to bank reconciliation?
No. So
No.
when you were checking it off to verify it, to balance it with the bank statement, as you were checking it off on that, it also was checking it off on the other form as well, on the statement.
No, you would have to physically print out the statement and actually check it off on yourself, because the statement is always going to be more or less correct, more accurate than your actual checking account. So you're checking it off one at a time. You're comparing your bank statement to your check register.
Okay.
Okay. All right. So that was bank reconciliation for you. Okay. And of course, if you could do a bank reconciliation, again, like I've mentioned before, you can also proceed with a different reconciliation, and that's exactly what we're going to do today in this book. Is that, well, if you could do a bank reconciliation, right? We took a look at all the stuff, right? Or we see, so in this case, we can also reconcile credit cards. So here is what we're going to do. We're going to be reconciling a credit card because, again, it is a common transaction that can happen. Now, how do you reconcile a credit card? Well, in this case, we know that if we click the reconciliation window, right, we can toggle that account by the drop-down menu, and let's locate that National Bank Visa credit card. Should be right here, National Bank Visa credit card. So here it tells me that my current balance, or as of, I have to change this again to February 21st. Okay. And in this case, right, it tells me that my previous bank balance was $2,152. Okay. And let's take a look in my book. Now, again, your book is actually, this is one of the worst ones, at least the bank statement, you're able to see the numbers. This one, you can barely see them because it's even smaller. But if you take a very close look, right, you have the February 28th of the 21st, right? That's your statement date. And again, the due date is the March 31st, right? Now, again, this is your account balance, and it says the minimum payment due. And then here it says right here that your new balance should be $182.81. So this is the number we're going to be plugging into our actual bank account. But let's take a look, because we need to remember our beginning that we started out was $2,152, which is right here. It tells us right here that that's what we started out with. All right. It also tells us that because we started out with that, this is what we made a payment for. And then we charged the credit card twice for for $133, and then for $36.40. So this is what was charged. Okay, now let's first start off with this, which is the ending balance. So the new balance is going to be $184.81. So $184.81. Okay. So 18481. Okay, and the same thing that you're going to do here, you're going to process is that what was the interest that was charged. Okay, so in this case, let's take a look at my statement. In this case, it gives you a breakdown of how much interest was charged. Interest was $16.11. And again, it was on the 28th of the 2021. Okay. And of course, what account this now? This is going to be interest expense because I had to pay into the interest. Okay, and again, overhead because the credit card is used for both locations. All right, and then I'm going to go ahead to again continue. So since I already looked at my statement, I know that I charged two things, right? One for 133, which is right here. Okay, for 133, and I also charged one for $36. And I also made a credit card payment for $2,152, which then again down below tells me then your bank reconciliation is 0. So at the end of the day, right, this is how you reconcile your credit cards, right? You can reconcile anything you'd like as long as you have your statement and you have something to compare. So I guess the most common ones, once again, is a bank account, a credit card account, and those are the only two that you would normally see, right? And I'm going to click continue. Now here's the difference, right? See, if you notice this, everything looks the same. The only difference here is that now, when we're taking a look at a credit card, now it's going to tell me, well, what do you want to do? You have two options, right? Now that I'm going to proceed with my credit card reconciliation, the only difference here is that you have the option to either enter in a bill or to pay the actual credit card off. Now in this case, right, this is very important that you need to know because we did take a look at how you pay your credit cards off, right? We did that in chapter 4. Now in this case, right, there are things that you need to understand, okay? Because it says on your statement that the minimum payment is only $12. Now, this is what I'm going to ask of you. If you for surely know how much you're going to make a payment, then enter in the bill. But if you do not know, and you're going to wait till the very end of the month to pay, or when you get closer to the actual due date, then and you remember that you have to pay your credit card, but you're not for sure how much just yet, then wait till the very end and then just write a check afterwards. Okay? So again, for small businesses, right? Especially when you have other bills that you have to pay that are more important, then you're not for sure how much you're going to pay your credit card. And let's say you remember, if you look at the previous section, right, it says that you owe $2,152. Now again, in a perfect world, you wouldn't need to have a credit card, right? You would pay it off immediately. But in this case, if I'm a small business and I can't afford to pay $2,000 in one go, and I'm going to finance it, right, make monthly payments, and my minimum is only $12, maybe I only make a payment for $50. If you know how much you're going to make a payment for, then go ahead and enter in a bill. But if you do not know how much you're going to pay, then wait till the date gets closer to the due date and then write a check that way. All right, so that's the two options here. So in this case, I'm going to say I do know how much I am going to pay, and that's what I would do. I'm going to go ahead and enter a bill. Now in this case, right, you can modify your bill however you like. All right, and then you're going to get the same reports. Okay, in this case, I'm not going to show my reports. I'm just going to close. So again, when you enter in your bill, you can always change the amount that you actually owe, because once again, let's say I'm only going to make a payment for $50 and make a payment for $50. Okay? And I'm going to click save and close. So then now, when I actually have the time to pay the bill, I only owe $50. However, it's not going to actually, it's in context to the actual credit card, it's only going to say I only paid $50. That means I still owe X amount of money, right? Whatever $184 minus $50 is what you actually still owe. And that's going to be written on your credit card your credit card register, because you only made half a payment, okay? So again, this is when you actually know how much you're going to pay. But in this case, I believe the book says you're going to make a payment for the full amount of $184. what was it? 184.81. Okay. And again, save and close. Okay. And that's how, so the steps to reconcile a credit card is identical. The only difference between reconciling a credit card and a bank is that at the end of a credit card one, you have the option to either make a payment or to record a bill. Okay. Any questions in regards to this section here in chapter 5?
No.
Okay. So once again, we talked about a bank reconciliation. We talked about credit card reconciliation. Okay, so let's take a look here in our section here. And I believe that is the last section of this chapter. So right here, review questions. All right, you guys ready? All right. So once again, we're looking into considering which is the best answer. Okay, so let's go ahead and begin. Question number 1. Okay, when the beginning balance field on the begin reconciliation window does not match the beginning balance on the bank statement, what should you do? C. Okay, you're going to use the locate discrepancy report to locate and find that discrepancy so your balances can match at the end of the day. Okay, so C is the correct answer. Okay. Number 2, which statement is false?
A.
A, okay? You can enter bank's service charges using the enter statement charges. No. Enter statement charges is what you're going to charge your customer. That's nothing to do with your bank account. So again, A is the correct answer. That statement is false. Okay? You cannot enter in your bank service charges in the statement charges. That's for your customers. Okay? You're not going to charge your customers for your bank services. Okay. All right. Where it says B is that you can enter in bank service charges on the begin reconciliation window. Yes. You can also enter bank service charges using the register transaction. Yes, you can. All right. And you can enter bank service charges using the write a checks window. Yes, you can. Those are options that you can do. But why go through all that when you can just do it all together in one simple window? Number 3, okay, so it's cut off here. Okay, when you find an erroneous amount on a transaction while reconciling, okay, correct the amount by
I want to say D.
D is correct, right? By performing either B or C. So B, right? By double clicking on the entry and then changing the amount on the transaction. Yes, you can do that, right? You can also by selecting the entry into the reconcile window and then clicking go to and then changing the information there. Once again, this is just a general information, but once again, you shouldn't be going and changing your transactions just cause. Okay. So once again, that's a waste of paper. Number 4, okay. To properly record a voided check from a closed accounting period, what should you do? So I did not talk about this, but it's definitely in your readings.
C.
C is correct, right? In this case, of course, you would have to have admin rights to be able to access a closed accounting period, which we'll talk about in chapter 14. So once you close out an account, what happens is that it's locked out, because then that prevents any fraudulent charges from happening, right? Anybody that's trying to mess or try to cook the books, right? So in this case, right, you would find the entry in the closed account balances, and then you would actually go to the edit menu and then click void, right? You would just void the check normally, and what happens is that means the account balance for your beginning balance will drastically change. Okay. Number 5, which of the following columns cannot be displayed in the checks and payments section of the reconciliation window? So basically it's asking me, what do you see on there except, or in this case, which of the following columns cannot be seen? So which one isn't on there?
Letter B as in boy.
Letter B as in boy. Yes, there is no classes on there. Of course, you have the check number. That's how we associate our checks that cleared. Of course, it has the date, because we need to know when that check cleared. And of course, you have the person that you paid. Okay. The only thing you didn't have was class, because in this case, a bank reconciliation has nothing to do with class. Okay. Number 6, you have reconciled your bank account correctly when B as in boy, okay, when the difference field shows 0, correct. Okay. Number 7 says that the reconciliation summary report shows, right, I showed you this. What does it show? D, right? It shows both A and C. A is the beginning balance shows on the bank statement. That's correct. And it also shows letter C, which is the ending balance shown in the register in QuickBooks. Yes, that's correct, right? It doesn't show detail of the entries for the month of the register, right? That's the detailed report that actually does that. Okay. Number 8, which accounts should be reconciled? A, any account that receives register statement. So once again, so that's any asset, that's any liability, and any equity account, right? I've already mentioned this from the very, very beginning. Those are the only accounts that has registers. All right. Then at number 9, okay, when you undo a bank reconciliation, okay, which statement is true?
D.
D.
D as in David.
D as in David, okay? Undoing a bank reconciliation does not delete the bank service charges, records, or undoing bank reconciliations. Okay, so that's correct, right? I didn't show it to you because, right, that's in your book. But when you do undo a bank reconciliation, any entries, if you entered in interest or any bank service charges, those are permanent. You have to go to your checking account and actually undo that as well if you're going to reprocess your reconciliation window the same exact way. Okay. All right, and then number 10, okay, when a customer bounces a check, you should D as in David.
Yeah.
Click the record bounce check button at to again in the receive payments window. Yes.
C.
No. Number 10 is D. That's correct. Okay. So let's take a look at the other answers. Delete the deposit that contained that bounce check. No. If you delete it, what happens? You create a hole in your transaction. Okay. Mark the customer invoice as unpaid. You can't actually do that. There is no unpaid amount in here, right? You can't change that. In order to undo it, you would either have to void the check or click that bounce check, right? Create an invoice to the customer for the NSF check. No, right? By you clicking that bounce check window, it already creates it for you automatically. So you don't need to enter in or send a customer another invoice for that. Okay, it should create it for you automatically. All right, number 11. When you finish the reconciling a credit card account, you
Say C.
this is number 11. 11 is not.
B as in boy.
B as in boy can create a check or an amount for equal to or less than the actual amount that is due. Yes, that is true. You
That's
can
right. Okay.
where let's see what C says. Cannot choose to bypass making a payment. Yes, I mean in this case, that's not true because you can bypass making the payment by clicking entering a bill. Right? You don't necessarily have to pay right then and there. So in this case, yes, you can bypass the payment. You just do that by entering a bill. Okay. Number 12, okay? What is the accounting behind the scenes for a bill coded to a credit card liability account? Okay, so this is when you enter in a bill for a credit card. What does it do?
I think it's C. No. No.
Number 12C is correct, right? You're
Or
going to
D. Oh, it's C. I thought it was D.
Okay, well, let's take a look at it. So if I'm at the end of my window, right, and I am going to proceed and enter in a bill for my credit card, right? This is what's going to happen. In context, right, you're going to increase your accounts payable because now you owe money because you're entering a bill. And it would decrease the credit card liability account because you're essentially making you're trying to make a payment to the credit card. Right? Where let's take a look at D. It will increase accounts payable and increase the credit card. That's two increases in liabilities. So in this case, if I'm entering a bill, right, I'm going to be increasing my accounts payable account, which is owing money. But why am I going to be increasing my credit card? Did I charge my credit card?
No.
No. So that's why D is not the correct answer. The correct answer is C, as in cat. Okay. Number 13, okay, in what account is a transaction created if you complete a reconciliation and your difference is not 0? So once again, that you had to read this.
C.
C as in cat. is that you're going to do the reconciliation discrepancies. Yes. All right. So again, that's if you do end up recording something that isn't 0, what happens is that you will get reconciliation discrepancies. That's why you can run reports on it. Okay. All right, number 14. When you void a check written in a closed accounting period, QuickBooks gives you an option to create what? So again, this one is something that you had to read.
We're on number 14.
Correct. 14.
I say it's D. D as in David.
D
No.
is
Oh, is that right? It was either. It was between D and C.
okay. So again, D is the correct answer. All right, you would create a journal entry for the closing accounting period, and you would create one in the current. Yes. Okay. So again, you had to read to know this answer right here. Okay. Last but not least, question number 15. You are notified that you have a bounced check. Okay. What should you do?
A.
Letter A is correct. You're going to contact the vendor to either apologize and then either arrange payments. So either such as sending a new check over or paying by credit card. Yes, right? Excellent. All right. Any extra questions in regards to chapter 5? Okay, perfect. We're right on time. So it is exactly 10 o'clock.